Almost every year I can remember, when you get north of Halloween, the mints start to run out of their current year issue, and they're like, we'll pick back up next year. Well, you throw that into the BRICS meeting and the election, and I would bet that it will be the hardest year ever, with more and more people understanding what's going on as greater volatility leads up to these big events.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 13th through August 19th, 2024, while supplies last. First, we feature the famous 1-ounce gold Krugerrand at just $60 over spot. Next, we have the favorite bullion coin of Europe, backdated silver Philharmonics at just $3.10 over spot. And finally, we have 1-ounce platinum Canadian maples at only $80 over spot, one of the lowest premiums on platinum we've seen in a long time. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always delighted to have this widely followed returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. We're recording this on Monday, August 12th for Wednesday, August 14th. Andy, thank you for coming back on Liberty and Finance for this weekly market update.
Good to be back, Don, again. Thanks for having me, my man.
And for those of you who are keeping score at home, next week on Wednesday, the 21st, we should be back live at 8 p.m. Eastern, God willing, for our weekly market update live call-in. So look forward to that together. And Andy, we wanted to touch base with you because you brought up something rather sobering in our last visit, and that was the preponderance of high net worth individuals, billionaires, it was an example you gave, in the US, who have been perhaps following a conventional or traditional, or what you call it, modern financial advice over the past 40 years. And it's been working well for most of the top 1%. However, the rules are changing. The game is changing. And we've talked about that at great length on our channel. But many people at all strata are still following the same basic advice. You've told us that the central banks have changed their tune entirely, and you're going to talk to us more about that, new evidence on that. But you're predicting that it's very probable that some people at the top of the food chain would also take a clue and wake up sooner than the little man on the streets and take action to protect themselves in a way that might clear the shelves of the retail bullion market. So can you first bring us up to date on what the latest revelation was about central bank accumulation of gold, and what that maybe it foretells in terms of high net worth individuals doing the same, and then we'll get into some details about that.
Yeah, I wonder why people even question how gold's strength it's been so resilient, and Bitcoin corrected and the market sold off, yet gold's been so resilient. And I guess my point, Don, again, would be, how many more times do you need to hear this before it sinks in? Again, another record being made. First 6 months of the year of 2024 represent the most gold central banks of the world have ever purchased, ever. And it only superseded last year's first 6 months. And you, at the top of the list, you have Turkey and India, of course, China, you have Poland. And it reminded me of something that, and I went and I dug this up because a couple years ago, Adam Glapinski, who still is the head of the Polish Central Bank, said something very interesting. In my mind, he tipped his hand, because in 2021, he said, and I'm going to read this to you, he says, he was trying to explain why they were expanding the country's gold reserves by 100 tons. And when he announced the plan to expand it, he said the following. He said, our gold reserves are a matter of financial security and stability. Gold will retain its value even when someone cuts off the power to the global financial system, destroying traditional assets based on electronic accounting records. Of course, we do not assume that this will happen, but the saying goes, forewarned is always insured, and the central bank is required to be prepared for even the most unfavorable circumstances. That is why we see a special place for gold in our foreign exchange management process. And here again, they're buying Truckloads. I don't know if any of you have seen that movie that the Obamas produced. I didn't know they produced it till after I watched it. It's quite frightening, actually. It's a movie where the whole grid goes down and the internet goes down and the ability to communicate goes down and how fast things go pear-shaped. And you can only imagine, when you contrast something like what Lipinski is saying with the Microsoft outage recently, and then even more concerning to me, it's interesting. You see the insider sell so much leading into the end of the second quarter, right? And then we see the biggest one-day drop on the Nikkei, a massive drop in South Korea and in other parts of the world, and the biggest number drop ever in the Dow. Of course, they're all out. But when that happens, all of those exchanges go dark. Robinhood and whatever. What am I trying to say? Vanguard and TD Ameritrade, all of these, and Schwab, and they all go blank, right? At the same time, what are the odds? And when you hear him say something like this, it brings back to, I think it really underscores the whole point of counterpart liability, of what would happen if the grid went down. We keep hearing about that, little pieces, EMP and grid and electric and this movie, and how everything is it's all digits on a computer screen, including the banks. So I don't know. I thought that was kind of interesting that he said that. But here again, you got the central banks buying more gold than at any time ever. But this has been something that I've been saying to you since 2020 now, over and over and over and over again. And it goes back to what you and I were talking about before we turned on the camera about the little man rule and how the big guy's always ahead of the curve. Well, there is no bigger guy than the central banks, not only in wealth, but in understanding and in foresight and in the playbook. I think it's very illuminating. And then, of course, you have the Dutch National Bank, who I've talked a lot about, and the revaluation accountant. He recently said this has been a political decision. If there is a financial crisis, the gold price will skyrocket, and official gold reserves can be used to underpin a new gold standard, according to the Dutch National Bank. Little crumbs that are laid at our feet. Well, you got the heads of central bank, one guy saying that it allows you to start over with a new gold standard, and another guy saying that it allows us to protect ourselves against the grid going down, in essence, and everything is digital. I mean, what more does a guy need to hear? And then when you see the central banks buying it at a level the world has never seen, and you see the exchanges all in unison suffer the same issue the day that the market goes down, it's like, are these tests? Are these warnings? Are these crumbs? I don't know. You tell me. This is where I try and take all of these things and put them together. My mind goes right to it. Hell yeah, this is a warning. This is a test. This is a omen. And listening to them say these things, how do you not think that? I think the old statement, you don't own it if you don't hold it. I don't know that I really believe that, but there is something to be said for the elimination of any and all counterparty risk.
Well, when we've interviewed the market sniper on this general topic of war games and gamification of and predictions that have been laid out there, we know that the lockdowns that came hard and heavy on all of us over the past 4 years were in fact war gamed and planned out to the nth degree, and the consolidation of communications and tracing and tracking and control of the messaging on social media and from the major mainstream medias as well was all for not just foretold, but practiced and planned over a year before any of it happened. And so it's rather concerning to hear that there have been predictions. Of course, as you say, just the emphasis that you made was just to be on the safe side, or not that it would happen.
Just in case.
Well, just in case.
Yeah, but look what they're doing right now in Australia. They're talking about having to provide identification before you can use social media so that the police can monitor all the accounts in case someone says something bad, or in the UK, they'll throw you in jail. And even if in the United States, they'll try to extradition if you say something offensive to the crown. I mean, it's like it's crazy. You remember when you and I first met, Dunnigan, and we started doing this stuff during COVID, and the very, very beginning, I couldn't even say that word on your show back then. And it was the little by little when I think about how little by little then all at once applies. I mean, censorship is a good example. Like in our life, that was never an issue. And then little bits of it kept creeping in and creeping in and creeping in. And now in Australia, they want to censor everything you say online. And they've proposed providing all sorts of identification before you can access an account and giving police access to it. I mean, it's like little by little, these things happen, always in the name of security. And what did Ben Franklin say? I'm going to butcher the heck out of it, but you give up some freedom in the name of security, you never get it back, something to that extent. Just like 9/11 and taking your shoes off, unless you're TSA pre-check, you never get that back. Same thing is true here. I don't know. I think it is very concerning. And that is certainly another reason to distance yourself, if at all possible, from the matrix in a legal way. There are very few ways left anymore.
A lot of the people who've been watching our channel over the years know that we've interviewed such people as James Rawls from survivalblog.com and others who have recommended that people try transacting in real money, in silver, for example, for food in their local community, for if they're going to purchase other supplies, necessities, and have things on hand. We also interviewed several others who talk about that you've got to have a stockpile of the basic needs of life. And in fact, just today in an interview with Bill Holter that'll come out later this week, he talked about you've got to take seriously that what you have now is what you're going to have. And if you don't like the sound of that, maybe you better change what you have now, because if by the time comes that it's obvious to everyone that you need it, you won't be able to get it. We've all seen that happen in routine natural disaster situations. And it's absolutely the right mindset is to be prepared ahead of what's coming rather than wait for it. And here we're seeing it happen right before our eyes. And it's helpful. It's illuminating for you to bring forward those facts about what's going on at the international level with major central banks acquiring more gold than they ever have in the history of ever. And also, you've had the opportunity personally to meet with particular individuals or organizations at a very high net worth level and who are waking up sometimes at the advice of other family members of theirs, sometimes at the advice of those who are friends of theirs who are plugged in. And it's interesting because I'm also being approached by someone who'd like to provide an organized message to bring forward to such organizations for the good of all of those whom they are stewarding, whether it's pension plans or university endowments, et cetera, et cetera.
That's what I was saying to you last week. It's going to happen and it'll wipe out the industry. And it will. I mean, you get a pension that says, I want to put $200 million in metals. I'm dead serious about it. What are you going to do? It's too big for us. No, of course not. And it's real. And I think those are the people that are waking up, because these are the people that are seeing very large swings in their asset values, in their net worth. And, the wealthy own assets. The wealthy have bank accounts, sure, but the wealthy own lots of assets. And the swings on the up have been fantastic. But I think when they see the swings on the down, they get very nervous. And if you take a practical look at things and you are actually honest with yourself, you look at the state of the world and where it could be, to only focus on a mainstream mantra is foolhardy. All it takes is for one of these people to have their eyes open to some of the real numbers and the real reporting that you do with all of your guests every day. Watch one of those videos and their whole, it's just a poof moment. And then they realize that they better do something. And as we grow nearer to such a pivotal moment, like the big BRICS meeting in October, and of course, the elephant in the room, the election in November, I think people are beginning to kind of reflect a little bit upon what the future looks like. So yeah, I think it will happen. I really do. And when you look at the situation, if you're just honest with yourself, it started in the UK. They tried to normalize, it started with us in 2019. We tried to normalize the balance sheet and you get the reverse repo, or you get the repo market blow up and everything goes upside down, they pivot. And then you get the UK, they try to austerity and normalize their balance sheet and their pensions almost blow up, they pivot. And then you get us raise rates to 5% and the banks start blowing up. And now we're talking about pivoting. And you get the Japanese who do this and raise rates just a little bit, and strengthen the yen just a little bit, and everything blows up and they pivot. This is a situation that has been created by messing with Mother Nature, by suppressing interest rates globally for so long, creating and incentivizing so much debt that the bill has to be paid. And you're beginning to see that there are very few outs. It's either succumb to inflation or let the system blow up, continue to print and give in to inflation, or let the system blow up. And that's what you're seeing in all these Western systems, that we're teetering. And I don't know, it just goes to show how fragile the whole ecosystem really is.
Yeah, and my heart goes out primarily to those good meaning and hardworking and true souls out there that are going to get hurt really badly because they've been misled. They've had information withheld from them. They've had lies told to them, and it's not right. And so that's why we started Reluctant Preppers back in 2013. That's why we converted it to Liberty and Finance about 4 years ago, because that was the focus that emerged that was of the greatest concern to the most people on our viewing audience. And I'm reminded, this is going to sound funny, but I'm reminded of George Carlin talking about this layer cake, where he says you get the rich, the middle class, and the poor. He says you've got the rich that make all the money, pay none of the taxes. You got the middle class that do all the work and pay all the taxes. You got the poor that are there to scare the middle class into keeping doing what they're doing. What I'm concerned is that that hopefully as many people as possible will be wakened up across this entire continuum and take proper protective action. And it's not going to be something that happens automatically. It takes intentionality. It takes actually being willing to soberly look at reality rather than the lies that we've been told. And on the top, you might think that, well, they're deeper entrenched or something, but I know that Stephen Covey, author of 7 Habits of Highly Effective People, talks about that strategic leaders of companies, that sort of thing, are used to having to be visionaries, having to look ahead, having to look for, as you say, the breadcrumbs that are out there and connect the dots and see beyond what everyone else is seeing, certainly beyond what they're being told, so that they have that light bulb moment and they can make visionary choices and pivot. And I believe you're right that there's going to be those who are affected by that. And then, interestingly enough, I think on the other side of the coin, people who are the most grounded, the closest to the earth, that have the most traditional values, that are maybe doing, respecting what their grandfather taught them, that kind of stuff, it doesn't take a lot of convincing to convince them that gold and silver are real money, because that's the way it's always been. And I'm afraid that it's the middle class again in the middle that's just going to get stymied because they've been intoxicated with this higher standard of living than maybe their parents had or whatever, and thinking, gee, that we must be doing the right thing because we've been following all the rules and things have been going better than they were when our parents or grandparents were poor or whatever. But I'm afraid that they're really being lied to. And we know that.
And they're also being eviscerated. I mean, they're disappearing. We're literally destroying the whole class, the whole middle class, the whole backbone of this country.
Well, and a lot of them are small business owners. We heard Michael Oliver was telling us that 80,000 small businesses were surveyed, and almost 50% of them said that they're either certain or they're fairly certain that they will not survive as a business if this inflationary environment continues, for example, the destruction of value that's happening. So
yeah, that's the point. And it's the wealthy who do well in an inflationary environment because their assets go up in value. And so you see even the hint of deflation and the assets start to crumble. And so that's why they always choose inflation, because the wealthy get wealthier. Not that they're losing purchasing power, but their assets go higher. But it's true. And then you talk about, being lied to real quick. You have right before Silicon Valley Bank failed, you had, the Fed, Powell in front of Congress saying, that Powell said, nothing about the data suggests we've tightened too much, right? And then 2 days later, Silicon Valley Bank fails. And you go back and you go all the way back to Bernanke saying the subprime crisis is contained, and boom, it blows up. And the way they said there is no inflation, okay, it's transitory, okay, fine, it's structural, okay, it's going away, but the numbers are all a bunch of lies. And when you talk about Silicon Valley Bank, the FDIC reported $600 billion in unrealized losses in the whole banking system, and the Fed always claims to be looking at all of the data. And And they're supposed to be the key supervisors of the banking system. They would have had Silicon Valley's books. They would have had it all, and they didn't. And they jack up rates, and the whole system collapses. And here again, after you see one day drop, you have Jeremy Siegel, trotted out almost in tears, begging for a 150-point basis rate cut. Here again, to go, not only would that be the worst thing to do, because it would only exacerbate the unwinding of the carry trade, because it's if the yen goes higher, or the interest rate goes higher, or the interest rate received from U.S. Treasuries goes lower, well, the yen carry trade unwinds further. And I mean, they're not thinking this out, but here again, giving in to austerity, giving in to lowering rates in a weak dollar, and those aren't good things. And it's what they have always chosen, and this is what Trump wants to do too, and which kind of bothers me. He's advocating for a weaker dollar and for lower interest rates, and Vance is talking about, well, maybe the dollar shouldn't be the world reserve currency. Where did we hear that before? Oh yeah, knucklehead Jared Bernstein. So I don't know that anyone's going to be able to pull us out of this, but what I do think is that we are destined for much higher inflation as a result of a lower dollar, a lower interest rates. But what does that do to the debt? Who wants to buy our debt? And maybe this is why you see Judy Shelton come up and say, yeah, well, that's why you should issue 30-year treasuries in gold, which leads me to one last thing before I let you go. And that is a report. I don't know how many times when I see a report about gold in the Western media, it's always really bad. It's always, they frame it in a very bad way. And they'll always, even if it's a bullish topic, they will frame it in a bad light, right? And they won't speak to it in a flattering way. And they'll say, yeah, but. So let me see if I can find this here real quick. So the title of the article in Forbes magazine is, "It's hard to believe, but the world is beginning to lurch toward a gold-based monetary system." This is one of the first really positive, gold-positive articles I've read in a Western article ever. It's a very short one, so I'll read it real quick. So the author says, it's hard to believe, but we're lurching towards a gold-based monetary system. This despite the fact that the historical gold standard is held in almost universal contempt by economists and financial officials. Contrary to numerous myths based on ignorance, the system worked. The U.S. was on a gold-based system for 180 years until the early 1970s. We never had inflation when the dollar's value was tied to the yellow metal, and the U.S. experienced the greatest long-term economic growth in human history. The signs of change are here. One is that the central banks in recent years have been purchasing gold at record levels. Buyers include China, India, and Russia, and a number of other nations, such as Poland, Adam Lipinski. These countries are reacting to growing doubts about the long-term value of the dollar, which in turn is a symptom of the perceived decline of the United States. And I want you to think of Judy Shelton right here, who would be, I think, the head of the Federal Reserve if Trump wins. She's a gold bug. She advocates for the gold standard and issuing 30-year treasuries backed or redeemable in gold. It says, India last year began experimenting with gold-based government bonds. Monetary expert Nathan Lewis, who co-authored our book, Inflation, What It Is, Why It Is Bad, and How to Fix It, observes, these would probably be very popular with investors worldwide. From the start of the floating currency era in 1971 to the present, a gold bond paying 4% would have outperformed every stock and bond market worldwide. Zimbabwe, which must hold the record for hyperinflation, recently announced the launch of a new fixed currency in gold. Deep skepticism is warranted that this government has the discipline to make such an arrangement work, but the move is a sign of things to come. So I don't know that I've ever heard an article that framed gold quite this way in a Western publication. But in essence, what they're advocating here for is a gold standard, gold bonds, and tying a system to a tether that installs confidence in a country and in a financial system that's lost confidence. So I thought it'd be kind of interesting, and I really caught my eye.
Yeah, no doubt. And we keep an eye on that, see what develops there going forward. And for those who want to not wait for the government to get their act together and want to get their household to act together right now, you always offer as much as you can a weekly special. I want to share the new weekly specials and see if you could give us a quick walkthrough on these.
Yeah, the gold Krugerrand, $60 over spot. I mean, that's as cheap as I sold them for the majority of my career. The oldest 1 ounce bullion coin that you can buy. That's the first mint that ever started making 1 ounce bullion. It's kind of the iconic 1 ounce gold Krugerrand. There's 6 major mints in the world. The Austrian, along with the South African Rand mint. The Austrian mint is probably the most well-known mint in most of Europe, and the Philharmonic coin, which doesn't have the depiction of any queen or president. It's the Philharmonic Orchestra instruments on one side and the big organ that you would find at the Philharmonic Orchestra on the other. They're very beautiful coins. 310 over spot. That's in line with what I sold them for, just a little bit higher than what I sold them for my entire career. Really good premium. And, in the spirit of the U.S. Mint, who actually has floated a $1 trillion platinum coin, and through a Freedom of Information Act, I just read that actually was floated. Who knows if they actually do it, which would be kind of stupid. I'd rather see them revalue gold first than just jack up a coin and say it's worth $1 trillion. You got the 1 ounce platinum maple leaf at 80 over. Platinum's been really hard to get since 2008. The mints don't make very much of it. And you could argue that it might be as good of a value or even a better value, at least on many metrics, than gold. But it doesn't have the monetary history that gold does, and that's why the central banks are buying it. But its price is distorted from where it should be in relationship to gold and where it's always been with gold. So I think platinum will have its day too. And if you don't own any, it's not bad to have a little bit of exposure to it. At $80 over on the maples, it's as good as I've seen that in a long time too. The premiums are stupid low, and for now, but getting real close to the fall and the crazy time leading up to the election, I expect to see availability and premiums rise. Quite frankly, I'm surprised they are where they are now, but I guess we'll see what happens next week.
I think availability will be maybe more challenged in the fall. We're already in a 2-week back order on junk silver, 90% dimes. And it's been challenging from time to time to keep junk silver in stock. So it's important for us to be aware of those initial signs that happen.
That usually leads the way, but also, you think about it, even in normal times, in times when, demand was a tenth of what it is now, way back when. I've been doing this for so long, 34 years. Almost every year I can remember when you get north of Halloween, the mints start to run out of their current year issue, and they're like, we'll pick back up next year. Well, you throw that into the BRICS meeting in the election, and I would bet, in fact, well, remember I said this, I would bet there is a high probability, and that assumes that there's nothing earth-shattering that happens between now and then, but who knows, that it will be the hardest year ever, with more and more people understanding what's going on as greater volatility leads up to these big events. With the mints running out of their products typically anyway at that point of the year, and they don't start making new stuff till the following, who knows, I don't want to be the little boy who cried wolf and sound the alarm, you better buy, but it's something to think about.
Well, Andy, we're always grateful for your presence here for a weekly market update. That was a brainchild that you came up with about 4 years ago, and it's been a favorite, just a wild favorite among our viewers. They're always grateful for you here, and we look forward to doing it live, not this week, but next week. And just thank you for being here on this weekly market update on Liberty and Finance.
Pleasure's always mine, brother, and I hope you and yours have a good one, and everyone else out there, we'll see you all next week, God willing.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 13th through August 19th, 2024, while supplies last. First, we feature the famous 1 ounce gold Krugerrand at just $60 over spot. Next, we have the favorite bullion coin of Europe, backdated silver Philharmonics at just $3.10 over spot. And finally, we have 1 ounce platinum Canadian maples at only $80 over spot, one of the lowest premiums on platinum we've seen in a long time. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.